Welcome to Profiletraders. This is Reza and you're listening to my market analysis for Monday, January the 4th. So last night, by everyone's surprise, the Chinese market tanked 7% as the data came out showing that their economy is actually going down south at a much faster speed than anticipated, and sadly all the billions of dollars that they have injected and all the other manipulations and artificial manipulation of the economy and the market did not provide the results that they were expecting, and as they tanked, so did ES very massively during the overnight. So this morning we opened at 2000 almost with a colossal gap down, and as a few minutes passed by and everybody saw that there was very much no demand above the open, further long liquidation came in and the market took further of a beating on the downside. Then as we dropped pretty much 94 points from the high of 2080, so when we were here roughly about 2075, 2076 down to here, we had a 94 points. Once we did reach the 1980, suddenly a buyer showed up, reacted aggressively to the upside and left behind the singles that you are looking at the bottom. Then after a very long while back and forth, finally a colossal buy program kicked in into the last 30 minutes of the market, and as you can see it right now, we close at 2009 and a half. Now you have to ask yourself, who would be so zealous that it would come in and take the market from 85 to 2000 and almost 10 in 45 minutes? The answer is very simple. It's called Janet Yellen. And why would she do that? Well, she would do that because if the market is at 2009 at the close, and tonight the Chinese drop another 10% or 5% or 7%, and the market wants to crash, then in order to come down to the low again, we will have to come down 28 points just to reach today's low. If they would have allowed the market to close at the low of 1980, and then we would have another 30, 40, 50, 60 points drop during the overnight, I can only let you imagine the reaction that people would have had tomorrow morning. So this was a classic manipulation in a critical situation where you take the market artificially in the last minute as high as you can, so that if there is a further drop into the overnight, you drop from a much higher level. Of course, part of this, I am sure there was a bit of a short covering rally that was also triggered by this extraordinary aggressive last minute buying. Part of it was also probably some of the gambling money that usually position itself during a week beginning of January, because in the next 2 weeks we are going to go into the earnings season, and more often than not they buy the earnings season rather than selling it. But this last minute move to the upside that was quite colossal cannot be trusted whatsoever. Why? Because it was done at the very last minute and the market did not have time to react to it. However, We cannot deny the fact that we did close at the high of the session, and now as long as we are going to maintain ourselves above 1998, and if tonight the Chinese market doesn't crash, we have definitely the potential to go up, retrace a good portion of this massive amount of a drop from last night. The first level of resistance that will come in on the way up is going to be at 2019. The second resistance that will come in from the upper part is 2026. The third resistance that will come in on the upside will be at 2032.5, and if we can retrace all the way to 2032.5 and not reject from it, most likely then we are going to delete and erase entirely Sunday's night drop. On the way down, if we do break below 1998, then I'm expecting that we are going to come down first towards 1990. Let me clear up some lines so I can use them. So on the way down, support comes in at 1990 if we break below 98, and then after that we are looking at 1984, where the buyer rejected the market on the upside with a swift rejection, and if he is not going to defend 84, then obviously we're going to go break the low, and once we do break that low, what type of reaction we will get is to be monitored. So it was overall an extraordinary, volatile, crazy beginning of the year, which is possibly indication that most of January will be crazy as is, and if it's going to be crazy as it was Sunday and Monday, volatility will be extremely high and the risk of the market will be much wider than it would normally be. Now for crude, as we heard yesterday that the Saudis killed the mullah that was related to the Iranian Shia groups. They went and burned the Saudi embassy, showing how civilized they are. And then, as a result, the Saudis kicked the Iranian diplomats out. Then the Bahrainis kicked the Iranian diplomats out. Then the Sudanis kicked the Iranian diplomats out. Now the Iranians are all on the streets burning Saudi flags, American flags, crying and screaming for revenge. And as a result, this morning oil opened up and then aggressively pushed to test the overnight high, and as soon as it went up there, we got a very, very aggressive rejection back down. And good portion of this drop of CL back to the low was due to the fact that we got a very strong rally of the dollar, which is always a very big negative for the oil and CL, because when the dollar rallies, it pressures the price of oil. But now we are back into the game where we are going to get a massive amount of news volatility injected into CL, and you have to monitor very, very carefully what comes out of Middle East, because if there is any conflict between the two countries, Saudis and Iran, which will most likely bring in others into the picture as well, you could experience an extraordinary aggressive spike in the price of oil. So be very careful when you trade CL that you have a ear listening to the news and monitoring exactly what is going on. So now, as we have developed rotation at the bottom without being further able to break the low, we could now say that support, very mild support, has been built in at the bottom here, and now we do need to reject above 37 in order to go challenge 37.50, and if we break above 37.50, then we should go challenge the high of today at around 38.40. And if of course we do break the 36.20 on the downside, next target will be 35. If we do break below 36.20, next target will be 36 even, and if 36 doesn't hold, we are going to go challenge the very recent low that we did put in place at about 35.44 or so. So embrace yourself for very, very big volatility coming in for January as earnings come into play, and as we are seeing again emergence of the Chinese issue and problems that can definitely impact and affect the market. As for gold, there was a little bit of a move to the upside, but again, as usual, it was unable to break above 1080, and then it faltered back and close to the very low. Therefore 1080 still remain a very strong level of resistance that needs to be cleared decisively if we want to be able to go challenge 1090 and then 1100. And in terms of support 1 comes in at 1067.4, support 2 1060.2, support 3 1053.9, and if this doesn't hold, 1045.2 as the line indicates at the bottom of the chart. So thank you for listening to today's analysis. This is Reza with Profiletraders. If you wish to join my trading room and get all my courses, you can get it all from my website profiletraders.com. To tomorrow.